Good afternoon everyone, and you're very welcome to today's webinar. For those of you who have just logged on, we've already completed a sound check. You should be able to increase the volume on your phone, or if you're using the mic and speakers option, you can do this using your computer. So today's webinar we have two speakers, Paul Byrne and Steve Pipe. Paul is the Managing Director here at BrightPay. He is also a chartered accountant, having spent 20 years previously running his own practice. Today, Paul will talk to you about Auto Enrolment, Are Your Clients Ready?, which is designed specifically for bookkeepers and accountants who have payroll clients. Paul will give his fairly unique insight into what Auto Enrolment will mean for bureaus who process payroll for their clients, along with his own thoughts on how you can capitalise from this new business opportunity. Today we are also delighted to welcome Steve Pipe as our guest speaker. Later Steve will be revealing the keys to pricing so that you can earn more and work less. And that really is an unmissable session because Steve has dedicated his life to helping accountants get better results for themselves and their clients. He is the founder of the 250-strong AVN Association of Accountants and the not-for-profit Accountants Changing the World movement. He is also the author of many Amazon 5-star rated books, which the likes of the president of the ICAEW describe on the dust covers as brilliant, and his 460 recommendations on LinkedIn make him the most highly recommended accountant in the world. His 12 major business awards include being named as the UK Entrepreneur of the Year by Accountancy Age and being shortlisted a couple of months ago by Accounting Web for their first ever Outstanding Contribution to Accounting Awards. So we'll have a Q&A session at the end of the webinar for about 5 or 10 minutes, and we'll try to get through as many questions as possible. So feel free to type in your questions into the questions bar throughout the webinar so we can get through as many as we can at the end. We're also running a competition today, and we are giving away 2 free BrightPay 15/16 Bureau licenses. And the competition is open to attendees who stay for the entire webinar, and we will email details of the webinars afterwards. Today's webinar is also being recorded, and we'll send out a link to the recording of the webinar along with the presentation slides to everyone. So I would now like to pass you over to Paul Byrne to begin Auto Enrolment, Are Your Clients Ready? Thank you.
Hi everyone, thanks Rachel. Sorry, just go back to the previous one. Hi everyone, and thank you for joining us today. It really is great to have a practice expert like Steve Pipe joining us shortly. I have no doubt that you will find his presentation both educational and rewarding. So just a small bit about myself to start off. As Rachel said, my background is as a practicing accountant. I started my own practice back in the 80s and eventually grew it to a 3-partner practice with 10 staff. While in practice, I provided payroll bureau services for about 30 clients, so I have some idea of what it is like in the front line. In 1992, I got into payroll software development. A large part of my reasoning for this was to make better software than what I was using at the time. Eventually, I began working in software development full-time, allowing me to focus on a wider range of software packages for both Ireland and the UK. Eventually, we introduced BrightPay and Bright Contracts. Unfortunately, I can't claim full credit for BrightPay, which was written by someone younger and better than I, my fellow director Ross Webster. Today, over 80,000 employers across the UK and Ireland use our products, and it's a figure that we're improving on every year. So here is the agenda for my slot today, which I hope you will find useful and give you plenty of food for thought. When talking, I will often refer to auto enrolment or automatic enrolment simply as AE. For those of you who have tuned into any of our previous webinars, apologies if I end up repeating some of the points previously made. Unfortunately, this is unavoidable. Okay, a quick recap on what AE means. And just to note that this is only a summary. AE is a vast and complex subject. It would take days, weeks, even months to cover the subject properly. At the end of the day, you should not need to have an in-depth knowledge of AE. It is up to your pension provider and payroll software provider to filter out all the noise for you. The workplace pension reforms, automatic enrolment, are are set out in the Pensions Act 2008 and were introduced in October 2012. All employers are required to offer a workplace pension scheme to their eligible workers. AE is being rolled out in stages across all employers and started with the larger employers in October 2012. By 2018, all employers will be required to offer workplace pension schemes to eligible workers. Large employers became subject to the duties, in other words reached their staging date, between October 2012 and February 2014, and medium employers between April 2014 and April 2015. From June 2015, that's June just passed, small and micro employers have started to reach their staging date. What AE actually means for an employer is that from their staging date, or from the deferred date if they're using postponement, all eligible job holders must be automatically enrolled. All employees must be assessed to determine whether they are eligible job holders, non-eligible employers, or entitled workers. And just a note on this terminology, the pensions regulator has actually changed their terminology they're using on their website to basically cater for the small and micro employers. For example, the eligible job holders are now being referred to as workers who must be enrolled. Non-eligible job holders would be workers who have a right to opt in, and so on. So that's just an interesting change, particularly if you're advising clients who probably wouldn't understand the terminology that you're used to using, i.e. eligible job holders. So anyway, eligible job holders are those who are aged between 22 and state pension age. They earn above the earnings threshold, which is currently £10,000 per annum, and they work in the UK. All other employees are either non-eligible job holders or entitled workers, and they can choose to join the workplace pension scheme. So in summary, auto enrolment is something that is optional for the employee but mandatory for the employer. With AE comes a number of employer responsibilities. A pension scheme must be set up with a qualifying pension provider, and this should be done in advance of your staging date. This should not require a great deal of time. For example, registering with Nest should only take about 30 minutes on average to complete. And it's interesting also to note here that the pensions regulator's latest advice is that if you do a pre-staging assessment of an employer and you find that there are no eligible job holders at that stage, in other words, it doesn't look like there's going to be anybody that you need to enroll in the pension scheme, you don't actually need to register a pension scheme until such time as, say, a non-eligible job holder decides to opt in or an employee becomes eligible. So just an interesting change from the regulator's guidance. Next, the workforce must be assessed at your client's staging date, and all eligible job holders must be automatically enrolled into a workplace pension scheme unless they're using postponement. All employees must receive communications within 6 weeks of the staging date, not just those who have been enrolled. You must notify eligible job holders, non-eligible job holders, and entitled workers, including those who have been postponed from AE and how they have been affected. Apparently, some employers also believe that if they choose to postpone all employees for 3 months at their staging date, then nothing needs to be done in that 3-month period. This is not the case, as all employees must receive a communication within 6 weeks of the staging date relating to the postponement and explaining when they will be enrolled. If this communication is not issued, then the postponement effectively never happened, and enrolment must be completed retrospectively back to the staging date, which will in itself be a nightmare. There are also a number of ongoing employer responsibilities, such as handling opt-outs and opt-ins, making deductions and contributions, monitoring employees each pay period, and sending a contribution file to the pension provider. Employees, or you on their behalf, must complete a declaration of compliance within 5 months of the staging date to notify the pensions regulator that they've complied with AE. By the end of September of this year, over 60,000 employers had completed the declaration of compliance, enrolling 5.4 million eligible job holders into a workplace pension scheme. And again, an interesting note on this number is that there's probably been about 20 million employees who have been part of companies that have staged. 10 million of those apparently have had existing pension schemes, mainly in the public service, and a further 5 million were non-eligible job holders or didn't need to be enrolled. The pensions regulator estimates that over the next 3 years, around 1.8 million small and micro employers will need to act as a result of the new AE duties. You will see from the slide here that January 2016 is when the bulk of small and micro employers start to stage. So this is the start of the so-called tsunami, and things will definitely heat up from there. A lot of the companies staging before now will probably have had their own HR people or in-house accountants to help them through the enrolment process. The vast majority of those staging from January 2016 will have no in-house expertise. The majority of these employers will not have the knowledge or experience to make informed decisions when it comes to their AE obligations. With a vast quantity of information available, employers are fast becoming confused, bewildered and overwhelmed. The pensions regulator estimates that 78% of SMEs will turn to an accountant, bookkeeper or payroll bureau. So you have a gift-wrapped business opportunity, and this is business you don't have to go chasing. So payroll bureaus need to decide if they are ready to take on AE business. With many shying away from offering this as an extra service, bureaus will need to determine what kind of information and support they will offer to help their clients comply with these new AE duties. Advisors will find that a large portion of employers will contact them very close to or even after their staging date. If a client does contact you after their staging date and has done nothing, if their staging date has passed by less than 6 weeks, get them to issue postponement letters to all employees immediately. Otherwise, they will need to backdate AE back to the staging date. Payroll bureaus that want to succeed in this competitive industry will need to predict the evolutionary needs of their clients. So you need to establish yourself as a proactive rather than a reactive AE advisor. Bureaus will naturally increase their income by providing this service in exchange for an initial setup fee, plus a monthly retainer to manage the ongoing AE duties, or an increased price per payslip. One bureau client mentioned to me that for, I think it was a 15-employee client, they had charged £400 for handling the staging and upped the price per payslip by 50% to cover ongoing monitoring and assessment, and apparently the client was delighted. So by offering a complete end-to-end solution, bureaus can generate income and enhance client relationships. If bureaus offer other services such as bookkeeping, tax returns, audits, management accounts, etc., they will have a new platform to reach and upsell to this new audience. You will find that employers will be happier to consolidate all their outsourcing services to one person or advisor. So there are a number of benefits for your clients who outsource to you for auto enrolment. Time. There will be significant time savings for your payroll clients. By outsourcing AE to a payroll professional, your client can avoid investing huge amounts of time researching how to comply with AE. The implementation of AE could also be very time consuming if your client doesn't have the correct technology or software in place to automate a lot of the AE admin tasks. Cost. Time is money, as the saying goes. Without your help, your payroll clients might choose payroll software that doesn't have AE functionality. And even if it does, some payroll providers are charging an additional charge for AE functionality and a further charge to support your clients through the process. With a bureau, your client can avoid costly mistakes and save time that otherwise have been taken out of their normal working week. Focus on core areas. Especially for small and micro employers, their time is extremely precious. Time away from their business is money. Outsourcing AE to a payroll professional frees up their energies and enables them to focus on the core areas of running their business. Expertise. Implementing AE may require skills that staff do not possess. Outsourcing will provide a level of continuity to the company while reducing the risk of possible non-compliance. Okay, while there is no legal obligation to have software in place, the pensions regulator encourages employers to use an integrated payroll and AE solution that can automate employer duties and simplify the AE process. It is important that payroll and AE software can handle all the necessary employer duties, and you should test it well ahead of your staging date to make sure it works. Some payroll software provides auto enrolment functionality that can be tedious and time-consuming, while other providers offer a streamlined solution that will automate AE duties. For large, repetitive or time-sensitive tasks, the speed of automated AE offers significant cost savings to bureaus. This will be especially relevant when these employers approach their bureaus close to, at, or even after the staging date. By making sure that your payroll software does the following functions, it will allow you to streamline your processes and start making a profit from AE. So to check, ask your payroll provider the following questions. Does your payroll software assess your workforce? Does it allow the use of postponement? Does it automate employee communications? Does it calculate the pension contributions? Does it handle opt-ins and joining? Does it handle opt-outs and refunds? Does it notify you when actions need to be taken? Does it keep records and provide reports? Does it integrate with some or all pension scheme provider systems? And does it provide free support? If you are selecting new software, you should ensure that it's compatible with your existing systems. So it is extremely important that you communicate with your clients so that there is a mutual understanding when it comes to your auto enrolment service offering. Firstly, be proactive and communicate with your clients. Let them know what auto enrolment duties you are willing to fulfill and the additional fees that will be required for the added services. An idea is to have a tiered pricing system so that your clients can have a menu of options to choose from. When a client decides to utilize your auto enrolment service, it is vital that both parties understand who is responsible for each of the different auto enrolment duties. To help your clients with auto enrolment, it is important you understand their workforce. You must understand the different types of worker and what defines them, what your client must do for each type of worker under AE. Some employers may want to raise general awareness among their workforce about AE before staging and may turn to you for assistance with this. There is a range of information that employers are required to provide to their workers depending on their worker category. Each employee must receive particular communications about how AE affects them, as well as making sure the right person gets the right information at the right time, for example, if they change worker category. For example, an eligible job holder must receive a letter telling them that they have been enrolled, and their enrollment date, their contribution rates, their option to opt out, and general information about how auto enrolment affects them. On the other hand, non-eligible job holders and entitled workers must be informed of the right to opt in or join a scheme, while postponed employees must be notified and given the date when they will be reassessed for auto enrolment. The pensions regulator provides poster templates, articles and other sample materials that can help with employer educating their workforce prior to staging. Your payroll software should also be able to streamline the communications for you. Depending on the pension scheme being used, the pension provider may also handle communications for you. Some payroll software allows you to easily produce interactive and personalized letters to provide your clients with the relevant communications for their workers. So if you have payroll clients, there are 5 important things to consider which will improve profits and increase the turnaround. Engage with your clients, avoid penalties, provide expertise, use the right payroll software, and increase your revenue. So just looking at these individually, engaging with your clients. Advisors will find that a large proportion of their clients will contact them very close to or even after their staging date. It is important to engage with small and micro employers that have not yet staged to help reduce the number of latecomers. The first thing to do is to find out your client's staging date in order to start planning accordingly. It is possible to look up your client's staging date on the pension regulator's website if you have their PAYE employer number. You need to be proactive and notify these clients that you are open for AE business. Communicate your service offering and price it with your clients so that they will know who is responsible for each task. It would be a good idea to send your clients an overview of what auto enrollment will look like at the time of staging. In a few minutes we will show you a free pre-assessment tool that shows you each employee's work category and gives the client general information about the assessment process. Be aware that if you decide not to process AE, there will be the risk that you will lose some or all of your payroll clients. The impact of AE will affect your client's business now and for the foreseeable future. The pensions regulator will continue to enforce fines and penalties for non-compliance. Up to June this year, the pensions regulator has issued 1,295 compliance notices and 332 fixed penalty notices. And you can be sure that the number of fines and penalties will increase substantially when the small and micro employers start to stage. Not allowing enough time to plan could lead to your clients being fined. By planning ahead, it will allow you on behalf of your clients to avoid these fines. You do not need to have an in-depth knowledge of AE. However, by understanding employer obligations, a bureau can position themselves as an authority figure who is open for AE business. Employers outsource their payroll process to you because you have the know-how and it saves them time and money. Today, with AE, it is not only about cutting costs for employers, but trusting you as a payroll professional to make sure they are fully AE compliant. Furthermore, some employers may not have the competency, time, or know-how to handle AE themselves. Payroll software will play a vital role in ensuring the success of AE. Without the appropriate systems, bureaus will need additional time and resources to cope with it. Payroll software can provide the necessary functions to automate the employer admin tasks. You will need to know which employees need to be automatically enrolled and which employees have the option to opt in. Payroll software can access employee pay and other information so as to establish the work category. The regulator further urges bureaus and employers to check with their payroll provider to ensure that it will correctly identify the duty that you have for each employee and to see if the system will support the requirements of AE. So AE is presenting bureaus with a unique platform to increase profits. There are a huge number of small and micro employers due to stage between now and 2018, and it is important to capitalise on this window of opportunity. By offering AE as a chargeable service, bureaus can add additional revenue streams, provide value added to existing clients, and increase the possibility of bringing new clients on board. It further provides a competitive edge to you over other bureaus that refuse to provide AE as a service to their clients. Fortunately, modern, innovative solutions exist that can automate AE chores. Armed with the employer staging date, bureaus can now simply enter the date to assess each employee's eligibility for AE at the staging date. Good payroll software will further handle all employee AE communications based on each employee's individual eligibility. For example, and here comes the plug, BrightPay is an integrated payroll and AE software solution which allows you to streamline AE, saving you both time and money. With BrightPay, you can benefit from unlimited employers, unlimited employees, auto enrolment functionality, and free phone and email support, all for just £199 plus VAT per tax year. You can also benefit from a 60-day free trial, which has no limitations to the software. So I will hand you back now to Rachel, who will give you a quick demo, just showing how easy auto enrolment can be with BrightPay. In this example, we are assuming that the employer, or you on their behalf, has already registered with a pension provider, in this case Nest. And registering with Nest should really only take about 30 minutes on average to complete. So over to you, Rachel.
Thanks, Paul. So today we're going to have a look at a company that's set up in BrightPay who are using Nest as their auto enrolment staging date, or Nest as their pension provider, and are set to stage on the 1st of January 2016. So as soon as your staging date is known, this must be entered in the Pensions tab and in the designated field provided. This is to make sure that on-screen auto enrolment alerts start up at the right time for you. Adding a pension scheme is also straightforward in BrightPay and can be done in advance of your staging date. Simply click Add New Scheme and choose the relevant pension provider from the listing. So currently BrightPay supports 14 different pension providers, so as mentioned today we're using Nest. So you must now enter your employer reference, and you'll receive this when you're setting up your pension scheme with Nest. And in the following tab, enter the group name, so I'll just enter monthly here. And you can now choose your contribution type and the earnings basis, or add additional groups if required, for example if employees are on different pay schedules. Just save that there. And at the top of the screen now you'll see the assessment preview, which Paul briefly mentioned earlier. And essentially it gives you an overview of what auto enrolment will look like once your client's staged. So this will be a handy document sent to your clients maybe 6 months before their staging date. So you'll see here it includes details of the different worker categories of each of the different employees, along with their qualifying earnings, contribution amounts, along with the total contribution amounts. This document also includes some general information about employee assessment. So I will include this PDF in the follow-up email just so you can look at it more in depth.
Just to say there, Rachel, as well, not only does it give an indication of how much auto enrolment will cost for the employer when they do stage, but it also lets them know whether any of their employees are actually eligible job holders, and therefore whether any of their employees need to be enrolled with a pension scheme, because the pension regulator's new guidance now suggests they don't actually have to register a pension scheme unless they feel they are going to be eligible job holders when they do stage.
Yeah. So going back to the payroll now, I'll just have to finalise up a few pay slips until we reach our staging date. Bear with me now a second. So you'll see now once we reach our staging date, you'll see these flags appear here. So these flags and alerts appear to notify you that you've auto enrolment duties to perform. So if I click through, it'll tell me the various actions available for the selected employee's worker category. So Amy here is an eligible job holder, so we can enrol them in a qualifying scheme, postpone them from up to 3 months, or mark them as exempt. So just enrol here. Simply choose the scheme you wish to enrol her into and click continue. So that there is Amy enrolled, and BrightPay will automatically prepare the enrolment file, the enrolment letter, and this letter is ready for printing, exporting to PDF, or emailing directly from within BrightPay. So if I click into print preview, you'll see here that the letter is customized to the individual employee with details of their staging date, their contribution rates, their option to opt out, and general information about auto enrolment and how it affects the employee. So once the employee has received the letter, we'll simply mark it as done. And you'll see now that the flag beside Amy's name has disappeared, so we're finished with our staging duties for Amy. Moving on, Carla is a non-eligible job holder, so the options here are print or export the right to opt-in letter, opt into a qualifying scheme, postpone or mark as exempt. And again then column is an entitled worker, so it's slightly different in that he can join the pension scheme. A useful feature in BrightPay is the option to process more than one employee at the same time. So you'll see here when enrolling one employee, you'll be given the option to enroll multiple employees with these settings. So simply tick each of the eligible job holders there, and that's them enrolled again. And again, BrightPay will automatically prepare the enrolment letters, and these can be batch printed, exported to PDF, or emailed to multiple employees at the same time, and again marked as done. So BrightPay can also handle the postponement, and batch processing can also be done for postponement. So simply choose the deferral date. I'll have to go forward here a few months. I think we're in February. And postpone for multiple employees. So simply tick all of those there. And again, BrightPay will prepare the postponement letter for you. So I'll just mark this as done again. So you can see here now that there's a live calculation of the employee and employer contributions. And if I finalize the pay slips and go into print preview, you will see the pension deductions showing up here on the employee's pay slip. So BrightPay can also handle the enrolment and contribution files. So within the pensions utility, we'll click the enrolment summary and create enrolment CSV file. So you must now enter the payment source. So I'll just say check here for the moment. And simply save the file to a location of your choice. Save that there. And again, the contribution summary is much the same. Create CSV file and choose the payment date. Go forward a few months again. And again, you save the file to a location of your choice. So at the moment, you have to manually log into the pension provider's web portal and upload these files manually. But Nest are about to introduce an API, which is kind of like RTI. It's a direct link between the payroll software and the pension provider. And BrightPay will have this functionality very shortly. So another auto enrolment thing is if an employee opts out, you can simply go into the employee's auto enrolment utility and click opt out. And you'll receive an opt-out reference from the pension provider. Simply enter it in there. And if we go back to the payroll now and on to the next pay period, you'll see that Amy has a refund of all the contributions made to date. So one last feature as well in BrightPay is the reporting. So under the analysis heading, you can create your own auto enrolment reports here. So I've created one report here, which run report. It has the worker categories and all the relevant auto enrolment dates where required. So you can also create your own reports here, new report. Simply choose the columns you wish to include, create a Nest report here. So you'll see it has all the qualifying earnings, the contributions and all the totals. So you can then save, print or export this report and use it as required. So that completes the short demo for today, and if you would like a more in-depth one-on-one demo, please let us know and we can arrange this for you. Also, before I pass you over to Steve Pipe, I just want to say as well, if you have any questions to do with BrightPay or Auto Enrolment, feel free to type them in the questions bar now so that we can get through as many as possible at the end. So now I'm delighted to pass you over to Steve Pipe. Okay. Okay, great.
So hopefully, guys, you can hear me.
Yeah, that's good there.
Fantastic. And hopefully you can also see my slides. My goodness, I must say I was seriously impressed, both with the functionality, the commerciality of what you've just shown us, and also with the price point. My goodness. How do you price it at that level? It's kind of a no-brainer, it seems to me, that's a great tool. Anyway, it's fantastic to be with you this afternoon. Thank you so much for having me, BrightPay. Thank you so much, so many of you, for coming and joining us both on this session. As promised, we're going to look at how you can price so you can earn more and work less. I think the brutal truth is, and this is a massive problem that affects our profession, is that too many of us price too low. And the challenge when we price too low, when we set our prices too low, is that we are forced to make one or more of three key compromises, because when we price too low, there isn't enough money in the business to do absolutely everything, and therefore we either have to compromise the quality of the work that we do, the quality of the service, we have to cut corners in order to get it done on budget, or we have to compromise the quality of the income that we earn as practitioners. In other words, we do it to an incredibly high standard, but we don't get paid enough for that, so therefore we don't take home enough to our families, we don't build up enough wealth and income for ourselves. Or we compromise our work-life balance. In other words, because the fees are very low on any given job, we have to do more and more and more jobs. We have to work harder and harder and harder to make sure that we both deliver quality service and enough income for ourselves, but we wear ourselves out and grind ourselves down in the process. So pricing too low causes at least one of those three compromises, and for many, many practitioners that I talk to, it causes all three of those compromises. But it doesn't have to be that way. It doesn't have to be that painful. And I really would encourage you to take notice of this slide here. Back in well, this was late 2014, Mark Wilkinson published an amazing report. 725 UK practitioners shared their pricing information. And the critical thing that came out of that research study, and there has never been such a large research study of how accountants here in the UK price, the critical thing that came out of that was that there is literally no such thing as a market price. See, the excuse that I hear, the reason, the explanation, but it actually turns out to be an excuse, when most accountants say to me, yeah, but Steve, I can't increase our prices, we can't increase our prices, we would lose all of our customers. You know, there's a market price, if we try and charge above that, we're going to lose every customer. But actually what this massive study found was that there is no such thing as a market price. Now, I studied economics for 4 years at university, 3 years at York where I met my wife, and I did a master's degree in the LSE as well. And if we know anything about classical economics, it is that where we have a market price, then it's kind of impossible to charge much more than that, because everybody would leave you and go and switch to the person that's charging the market price. In other words, a market price means that pretty much everybody has to charge pretty much the same price. However, in Mark's research, 725 UK practices, every single graph that shows the quartiles, I don't know whether you can see that, doesn't massively matter, let me explain what it is. In every single service that he studied, 725 accounting firms shared their prices. There was no commonality, there was no clustering of prices around a middle central market price. There was huge variation. There was an average price, yes, a median price, but the bottom, the next quartile down were typically charging 20 or 30 to 50% less than that. The quartile above were typically charging 50 to 100% more than that. And then at the extremes, there were even lower prices and even higher prices. The point is, if there's a market price, everybody's charge is the same, but there is absolutely no evidence of that market price existing. It's simply a myth, and the implications of that are profound. The implications are that price isn't set by the market as a market price. If it were, there would be the graphs would not look like this. They would not be at that kind of angle. They would be flat across the quartiles. However, they are like that. There is no common price that everybody charges, which means, and this is the big liberating factor, the price isn't set by the market, price is set by you. Price is a decision, and the quality of the pricing decisions that you make will shape your entire life. They will shape your practice, they will shape the clients you attract, they will shape the revenue you generate, therefore they will shape the salaries you're able to afford, and therefore they'll shape the team of people that you have around you. They'll shape your take-home pay, they'll shape your income, they'll shape your wealth, they'll shape the capital value of your firm, they'll shape how hard you work, they'll shape what your reputation is. So price is a jugular, mission-critical decision that shapes everything. And yet, we have training in so many other areas of our practice, but how many accountants have had training in how to price properly? In the main, we pick up the pricing strategies from the people we used to work with. We pick them up because it's what everybody else does. And traditionally, of course, that has meant time-based billing, which for all sorts of reasons, and we can look at that later if you want, is not helpful, because time-based billing is, I think, the main reason why so many accountants price too low. And anyway, with advances in technology, just look at the extraordinary technology we have just seen, the extraordinary ability to do so much more in so much less time. The second part of that sentence points out there's a problem, doesn't it? If work can be done in so much less time and we bill based on time, we are completely and absolutely stuffed as a profession. So we have to really focus on pricing. Now, what's really interesting also in this study, also in this same report, what the research team found was that on average, firms who are trained in pricing, rather than just make it up, rather than just doing what they've always done, but firms who are trained in professional pricing get on average 15% higher prices for the same job. Now that's an average. Many firms who get trained in pricing don't go on to do anything. Like, many of us go on training courses and we go back and we don't change our behavior in any way. So of those firms that were trained, some use that training, some don't, but even across all those firms, the average increase in price that they get for the same job is 15%. But what's perhaps even more interesting is, on average, those firms that are trained in pricing, as well as getting 15% higher per job for the same thing, if you look at their average fees per client, their average fees per client are 50% higher. And that's a combination of two factors. Yes, for doing the same thing they are earning 15% more, but also when you really get to the bottom of profitable pricing, not only will you charge higher prices, but you will also find ways, and I'll show you how in a second, of getting your customers to buy more from you buy additional services from you at those higher prices. And the combination of them buying more stuff from you, such as AE as we just saw, and paying higher prices to you means that on average the average fee per client for those firms who are trained in pricing is 50% higher. You take your existing block of fees and add 50% to it. That's probably the fastest, easiest, simplest way that you can grow your firm. So it's no wonder that so many more firms are beginning to take a look at this body of research here and saying, okay, how do we get trained in pricing? Now, the really good news is that I've got a whole raft of free training for you in it. Later I'll explain how you can get lots and lots and lots of really advanced training completely free. But now we've got a few minutes together, we're going to look at how the essential, the rudiments, the basics of training so that you can begin to price more profitably. In fact, at this point, I was going to toggle across. That's a slide for when we come back. I'm going to go into a role-play mode now. I'm going to imagine that that I'm an accountant and you are a prospective client. Let's say your name is Dave. It makes my life easy. You're a printer. You've come in. You're talking to me about us working together. And of course, we get to that point in the conversation when I have to explain what the price is going to be. I have to tell you how much it's going to cost. Historically, traditionally, of course, what would we do? We would either say, I'll go away and work it out, but you lose all the momentum then, don't you, if you have to go away. You want to seize the moment. They're sitting down in front of you, hopefully they're impressed. You want to be able to give them a price there and then. So if you do that at the moment, if you do that without technology, we saw before the extraordinary power of technology, if you do the pricing thing without technology, then what will happen is you have to make a price up in front of them. You have to go, well, it will be about £3,000. Now they know that that £3,000 is a question, the inflection at the end of the voice is a question, and they know for a fact that the answer to that question, for them at least, is always no. So you've already got a problem. If they were willing to pay more than £3,000, you've just left that money on the table. If they weren't willing to pay as much as £3,000, you've already got a gap. You've either got to crash and burn on price and show straight away that you have no backbone, and then they'll come back to you every single time to try to get you to crash and burn, or you're stuffed. You lose the client. So there has to be a better way, doesn't there? And in exactly the same way that we saw before using BrightPay and tools like that, you can fundamentally transform the effectiveness, the results, the profitability of the services you deliver, AE in that case. If you use technology, if you use digital pricing, you can fundamentally change the effectiveness, the profitability of your core pricing conversations, which of course, as we saw before, those pricing conversations, those pricing decisions shape your entire life. So let's do a little role play. Instead of making a figure up in front of this Dave printer client that's you, I'm the accountant, I'm going to go through the conversation I would have around price with you as my prospective client to show you how really switched on firms do this, how firms that are getting the sorts of increases in prices, the sorts of increases in average fees that we saw before. So they will open up a pricing tool. They might say something like, we've co-funded this tool, because of course if you are buying a tool, then of course you're effectively co-funding its development through the price that you pay. That's funding its development, isn't it? So we are co-funding a pricing tool that's used by hundreds of accountants or thousands of accountants with tens of thousands of their clients across the length and breadth of the country. And it's designed to take away this thing that many of our clients feel is very uncomfortable, that traditionally accountants are billed based on the amount of time spent, which in some clients' mind makes them think, you mean the slower you go, the more I'm going to have to pay you. That doesn't somehow feel right. The longer you take, the more I'm going to have to pay you. That doesn't feel right. So we've broken that link, and we've created a pricing system which gives you transparency and openness. In fact, if you would like, Dave, and I would say to the client at this point, at any point in this conversation, you can take the mouse and you can pick your price. Now they will never take the mouse, but they will be certainly intrigued by that whole idea. And then you say, all we need to do together, you sit together on the same side of the table, looking at the screen together. This is not combative. You're not on one side of the table and they're not on the other. That's a war. If you sit together, it's a collaborative process, finding a price by both looking at a computer screen to calculate that price. So the conversation would go something like, so I just need to ask you a few questions. We need to put a few bits of information into the software and it will tell us what the price is. And already that process is depersonalizing it. It's not your fault, the price, it's computer says. So it's already you and the client, this business owner, working together to find a price. So I put in a couple of bits of information already, Dave, because I know from what you said to me already, you're a sole trader, that your year end is the 30th of, you can see up here, I put in sole trader, that's this bit. I put in on the third line here, the year ends the 30th of September. I know you're a printer, so I put in your SIC code. And from what you told me before, I can either choose that they're a business to business, or they're a business to consumer, or add other categories. But let's say this is a business to business. He's a printer that sells printing services not to individuals but to other businesses. He's a sole trader, so there's no audit involved. The really first big question you have to ask the client is, what type of accounting system do you use? Now, if you're lucky, he'll know, although quite a lot of printers don't seem to have any kind of idea what accounting system they use. But you click on the link there and it will pull up the two essential elements, manual or computerized. You can add in Xero and QuickBooks Online and any other type of accounting system if you like, but the two default ones are manual and computerized. So let's say he's manual, and then it flags up this question. Okay, well, given you've got manual accounting systems, how good are they? Now, at this point, they always say excellent, so you need a system for getting them to understand, for having a mutual understanding of what excellent means. And I'll show you that system in a second. Let's assume when we look at that system, he backtracks and says, oh, actually, I'm not excellent, they're average. So let's settle for average. The system is here. If I click on this link here, it pulls up a Word file that has a description of what an excellent set of manual records look like. It means having all these ticks here, which means there's an analysed cash book, fully cross-cast, bank accounts fully reconciled to it, with fully analysed sales day books and purchase day books, reconciled sales and purchase ledger. He's glazed over. He has no idea what you're talking about. So you say, what do you have? I have a cash book and I reconcile it to a bank statement. Okay, that's these three ticks here, which means that on this system, on this basis, your accounts are average. Now that means that because you only do a little bit of the work before you give it to us, we're going to have to do more of the work to turn it into the finished product for you. That will obviously have implications, Dave, for the price that we see in a second. So we have a manual average set of accounting records, Dave. The only other there's only two more questions that I really need to ask you before the computer will give us a price. The first one of which is, how big is your business? Because obviously the bigger your business is, the more transactions there typically are for us to cover. And he says, well, we're 700,000 turnover. Now we've got to the point where there's just one more question to ask before the software on the screen will give us a price. And that question is, which level of service do you want from us, our 3-star or our 4-star or our 5-star service? Now you pose that question in a rhetorical way initially, because this is the first question where instead of waiting for them to answer it, what you would do is you would explain, let me show you what your investment for the 5-star service would be. Now if I clicked on that 5-star service, you can see down in the bottom right hand corner immediately, it's a net monthly investment of £456 a month for 10 months. That's $4,500 a year plus VAT. And at this point, one of two things will happen. If you are very, very lucky, he'll say, okay, that's great. In which case, after the meeting privately, you're going to punch the air because you just sold a $4,500 piece of work. More probably, he'll say something, that's really high. And then you can explain, well, the reason it's at that level is because it's the 5-star service and you get all of these things. And you can click on the link and it will pull up a detailed listing of all of the things included within the 5-star service. And then he'll begin to understand where that's coming from. He may at that point say, actually, I do think that I would find those valuable, in which case he might decide to pay the £456. Or he might say, well, that's a bit rich, really, for me. What else is there? And you can say, well, the 4-star service, now I clicked on that link and it's brought the price immediately down to $383. And the good news here is, of course, that every subsequent price that's less than 456, in comparison to the 456, feels like a bargain. And so there's comparative psychology going on here. There's a sigh of relief. Okay, that sounds really interesting. That price is good. But if it's still too high for him, you can show him what the 3-star service would be, $266 a month, and you can click on the link and show him what he'll get as part of the 3-star service. But also down towards the bottom, it will explain the things that he doesn't get as part of the 3-star service. And that's an important part of pricing psychology, because when you tell people what they don't get, very often a thing called loss aversion kicks in. We don't like missing out on things. So when we see a long list of things that we're missing out on, which actually you can see up here on the top right hand corner, they're not ticked. If I clicked on the 5-star service, all these things up here on the top right hand corner are ticked. They're part of the bundle. But if I only went for the 3-star service, now they're taken back out. They're not part of the bundle, and therefore I'm missing out on those things because I've gone for a core compliance service. Critical point to make here is this. that just because this is a 3, 4 and 5-star service does not mean that the 3-star service is worse in terms of quality or professionalism than the 5-star. If you think of BMW cars, they have a 3 Series, a 5 Series and a 7 Series. They are all the ultimate driving machine. It's just they're different price points because they get bigger and they've got more metal and more rubber and more CCs under the bonnet. It's not the quality of the car that results in a different price, it's the size of the package. And that's exactly the same here. It's what you get bundled in, more stuff bundled in at your 5-star level than your 3-star level. So let's say they're broadly happy with that price. Now we can go through the optional extras because that bundle does not include everything. For example, it doesn't include automatically their VAT returns. Dave, someone's got to do your VAT returns because obviously you're VAT registered at 700,000 turnover, and he'll say something like, well, how much would it cost for you to do them? Well, we've got 4 a year. That's now factored in the cost down here of the VAT returns. Someone's got to do, you've got 3 employees, I remember you saying, someone's going to do the self-assessment tax returns. Do you want me to factor the price in for doing that? Yes, please, it's added in the cost of those. We can then go on to the next optional extras, the other things which are not currently part of the package. It may be, for example, that we have a conversation around management accounts. Do you want any help with your management accounts? Well, how much would it cost us for you to do that? Well, if you wanted quarterly management accounts, that would bring the price up to now 574. Now you can see at every turn in this conversation, the price is going up, it's going down. We are putting things into the shopping basket, and if then it turns out that there's too much in the shopping basket, we can take stuff out. If it's too rich for him, if it's too expensive, the conversation can continue, going through many, many pricing permutations, rather than just you saying, well, it's £3,000 and him saying that's too high, in which case you've just got a problem straight away. If this price is too high, well, we can take the management accounts back out. If it's still too high, you can do your own self-assessment tax returns, and instantly on the screen the price is changing. And this conversation continues going through the optional extra screen, so there's complete clarity over what is and isn't included. So the guys, let's say he asks us to do his payroll, he's got just salaried employees, they're monthly paid, he's got 7 of them, that will factor in the cost for doing the payroll. Let's say 3 of them are going to be P11Ds, it's factored in the cost of the P11Ds as well. Now, by the way, I need to stress that every price that I've shown you on the screen are merely illustrative. They're the prices that are in the software from the beginning. Of course, if I were to go up here into the optional extras, I could change every single element of it so that they were the right prices for my practice. These are just the ones that it comes straight out of the tin. It may be at this point the client says, do you know what, that's the bundle I want, and if that is the case, we can go back, having seized the moment, the conversation continues until we found the bundle that fits him. If he now says, actually, I think on reflection I would like the management accounts, we can add them back in. Yeah, that's the package I want. He's just agreed to £581 a month for 10 months. Why 10 months, by the way? Because if you spread the cost over 12 months, what will happen is that you will just charge the same figure the next year and the year after and the year afterwards. If you have a 10-month spread, what that allows you to do, it feels like in the 11th and 12th month they are free, so psychologically the client has got a payment holiday, certainly, and that feels like it's free, but also in that 11th and 12th month you renegotiate the fee for the following year in the light of what's happening in the business, the quality of the accounting records then, the size of the business then, and so on and so forth. So this conversation continues through many iterations until you work together to find a price that fits. This is like getting to the checkout in Marks & Spencer's with your trolley of stuff. You put a whole load of things in. When you get to the checkout, if it's more than you can afford that time, Marks & Spencer's won't say, oh, we'll let you have it for less then. They'll say, well, what do we need to take out of the trolley? If we get to the final part of the conversation and he says, actually, no, that is too expensive on reflection, instead of you losing the job, you can just take out the management accounts. Yeah, that's right, 401, I'm happy with that. That's the package. Let's go with that, he might say. And if we get to that point, we can now produce the proposal for that. The software will instantly create for this business the proposal at that £401 a month that sets out everything we've agreed, all the optional extras and so on. We can email it to him, we can edit it, he can even sign it on screen, and then we can print it off. So we can seize the moment around this pricing conversation so that every conversation we have with a client or a prospect results in better pricing decisions for us, but results in them saying yes to the prices we've talked about. Now, that's the nearest you can get to value pricing for core compliance work. I would certainly use value pricing if I was, for example, pricing a piece of tax planning work. If we know it's going to save them 100 grand, market price these days tends to be 25% of the tax save. A value price of about 25 grand for that would be would be what many firms are already charging. But with the core compliance work, it's difficult often to come up with a value of that. So we've used that menu approach instead, and it works incredibly well. And the key benefits of that digital menu approach is that we've gone through many iterations. We have never once discounted. We have found different prices because we've changed the bundle. If the guy comes in initially to the BMW dealership and looks at a 7 Series but then discovers that he can't afford it, instead of you discounting the price of the 7 Series, you trade him down to a 5 Series or a 3 Series. But as a result, you get him saying yes in the end. There's no crashing on price, there's no discounting. Nobody argues with the price on the computer screen because the computer says it's not your fault, it is just the price. Out of fairness and transparency and openness, this is how we price. And it doesn't matter whether you're in a good mood or not, it's still the same price. Whereas what often happens, you've had a bad day, clients have complained, so what do? When you have a conversation with someone about how much it's going to cost them, your self-confidence is feeling low, so you quote a low price. Crazy. This takes all of that away. The conversation continues until they find a package that they're happy with, that they're happy to pay for, so your sales lead conversion rate goes up. It's a digital aid, so this differentiates you because you're using a digital pricing process. Clients love the fact that it's open and transparent, and they can even take the mouse and pick it themselves. They love the fact that it's not based on time, and therefore it doesn't matter how long it's going to take you, it's a fixed price that gives them certainty. And because we go through those optional extras, they end up there's complete clarity over what is and isn't included within the scope of the engagement, because if it's not ticked, it's not part of the engagement. But not only that, they end up very often buying more services. They add more things into the basket. More stuff gets ticked than would otherwise have been the case. So there are huge benefits from that kind of approach to digital pricing, and that's how I wanted to introduce those concepts to you. I say introduce because we are running an accountant's profitability masterclass, a large part of the focus of which is on pricing. If you are a partner, if you are watching this, if you find this exciting as an alternative way of pricing your services much more profitably, we have a few places left on that course which other people are paying to attend. It's the 8th to the 10th of December, but you are invited to come as our guests, completely free of charge, no charge whatsoever, for 3 days of incredibly high quality training, advanced training around pricing and many other ways of improving the profitability of your firm. If you think that idea sounds interesting, would you just go into the chat box and type in the word masterclass so I can get a sense of, in a minute, how many of you might find that useful. We're not going to allocate the places based on a first-come, first-served basis because we need the right mix of people in the room so that the 3-day event works really well. So just type masterclass if you're interested in finding out more about how you can get that kind of training completely free of charge. When we last ran the, we ran the masterclass actually 2 weeks ago. We run it every quarter. When we ran it back in April, which is the most recent one for which I've collated the results so far, 34% of the delegates rated it as excellent training, 66% rated it as outstanding training. All the other categories below that, poor, satisfactory, good and very good, not a single delegate rated it that. And you can see why, because on average they estimated that each of the firms in the room estimated that the stuff they'd learned, the training that they got, the CPE, the insights, the skills, would also allow them to improve their profits by 316 grand a year. That was their estimate. The lowest, the smallest estimated impact, which is a very tiny practice, estimated it would add 56 grand a year. So that's a very effective masterclass, and it's co-presented by me and my business partner Mark Wickersham, who was shortlisted for the Accounting Web's Outstanding Contribution to Accounting Award, because he is, without doubt, the leading thinker on pricing for accountants this side of the Atlantic. The other side of the Atlantic, Ron Baker is a genius, Mark is a genius this side of the Atlantic. His Effective Pricing for Accountants book is a #1 Amazon bestseller. He and I will be co-presenting 3 days of detailed training that you're invited to come to for free. Type masterclass in the chat box if you want to find out more, if you want to be on that list, as it were. You will get, as part of, in the run-up to that masterclass, as well as the training in December, we will give you the tools that I've just shown you to use between now and then, so you can actually test them out for yourself. We'll give you that pricing method, the pricing technology, and we'll give you video-based training around it so you can absolutely hit the ground running. You can start having different and better pricing conversations with your clients. but you'll also get a whole raft of other tools that we will give you to use before the masterclass in December across the whole range of the stuff that AVN's created. There will be no charge for any of this stuff. There are pricing tools so that you can show unincorporated businesses both the tax savings from incorporation and price on a value basis for them. There'll be pricing tools so you can do up to 115 million calculations at the push of a button to show an incorporated business the best way of extracting their profits from their business, in this case reducing the net tax bill down to 9%. You can imagine the value-based bill that you can create on that. There'll be software tools so you can benchmark your clients, so you can be proactive, you can create proactive advisory reports to clients, and there are software tools so that you can give profit improvement advice to clients. You'll get all of that stuff completely free of charge to use between now and the masterclass in December, if you type masterclass into the chat box. And the only thing is that if you get one of those places and if we end up paying the hotel for you to be there, then out of fairness, it wouldn't be fair if you booked it, we pay the hotel, and then you don't turn up with it. That simply wouldn't be fair. By the way, Rachel, since I can't see what's in the chat boxes, can you give me a sense of how many people have typed in masterclass approximately, at least either ordered?
There's 8 of them so far.
8 so far. Well, that's fantastic.
Yeah,
hopefully we'll get fantastic. So, but I say it isn't on a first come first served basis. It will be on the basis of getting the right mix of people there. But I promise you that for everybody who does put masterclass in the box there, that there will be some training, whether it's that 3-day training or we'll arrange something else if there are more people. So if you, in addition to putting masterclass in the box, I can get an instant snap view of that, which is hopefully what you're doing. If you would also, if you're really keen on that, send an email to my colleagues, info@avn.co.uk, just giving your name, your job title, the firm name, the number of partners you use to trade in and so on, because as I said, we need to get the right mix of people. Give us your website address so we can take a little look, make sure we get the right mix of people, and then you'll go into the pot for that completely free training and those completely free resources. So really, that's what I wanted to say. Hopefully that's been useful. Hopefully we can meet each other for that free training in December. Questions, I guess?
Okay, thank you.
Hi, Steve. Can you hear me, Steve?
Yes.
Yeah, I just want
Yes, indeed, I can, Paul.
Yeah, I, as you know, I was in practice myself. Gave it up a few years back, but I wish you had been around when I was in practice, because I could really have done with that 50% extra income.
Yeah, well, do you know what? We have been around for 17 years. AVN started 17 years ago, but you know, our paths didn't cross. And because you're in the Republic, aren't you? I think.
Yes, yeah, I am. Yeah.
Yeah, and most of the firms we work with are in the UK. So you would have the euro, for example, as your price point, and everything we've designed is for UK accountants and the UK business culture and UK tax regime and sterling.
Yeah, no, but it's genius to be able to produce basically a quotation for the client based on, you know, a computer model, because as you say, it takes the personality out of it. Really, they're the facts.
It does. And it also largely de-skills it in the same way, of course, that your technology means that the person doing AE doesn't need to know anywhere near as much as they would do if they were doing it from scratch. In exactly the same way, you know, we saw that pricing training has a massive impact on the profitability and shapes the entire firm's futures, but you don't have to be an expert in it if you use a tool. You know, use your tool and you've automatically got expertise at your fingertips. If you use the tool I've just shown people, they've got pricing expertise at their fingertips. That's clearly the way the whole world is going, isn't it?
Yeah, no, it's fantastic. As I say, I wish it had been around when I was in practice, because it was a struggle.
Yeah.
Okay, so I actually have a few points here to get to just before we get to the questions. Just to remind everyone, we'll be sending out a follow-up email, and we'll include a link to book a demo with free auto enrollment guides and details of upcoming webinars. I'd just like to say as well, our next webinar is next Monday, and we will be discussing 7 steps to profit with BrightPay. We will also have a guest speaker, Darren Critton, who is a financial advisor with us on the day. There is a few questions coming through there about the pricing of BrightPay. So there's a 50% discount at the moment for bureau licenses, and that's normally £199 plus VAT per tax year. Also, here's a few statistics from a recent customer survey. and also that BrightPay is accredited by the Institute of Certified Bookkeepers and is a preferred payroll supplier of tax assist accountants. So now we'll get to the questions here, and we actually have our support manager here with us as well today, Victoria Clark. Hi everybody.
Yeah, let's bring the microphone over.
So there's a good few questions coming through there. I'll start off with a few masterclass ones there. There's a few coming in. If you cannot attend the masterclass, can you get the tools?
I don't have authority to answer that categorically, but if someone wants to send an email to info@avn.co.uk, I mean, yes, you can buy the tools. I think the question's probably, if I don't come to the masterclass, can I get the tools for free? I don't know the answer to that. So if someone wants to send an email to info@avn.co.uk, same address I put up before, then we'll look at that possibility for you. But realistically, the tools, the pricing tools that I showed you, the long-term price for those is £97 a month. So if you want to use them, that's effectively the commercial arrangement that if they wanted to. And of course, that's on a month-by-month basis. So if they're not actually making a profit from using them, they'll just simply stop. You're only going to invest 97 quid in a month if you are making several £1,000s more in terms of increased prices and increased profitability, which if you use them, you absolutely categorically will. It's a no-brainer.
Okay. And are you going to do the same in London?
Do the what in London,
I
sorry?
assume the masterclass?
No, the masterclass we only ever run in Nottingham.
Okay.
So no, I'm afraid the masterclass will not run in London. We run it in Nottingham because it's bang smack in the middle of the UK. Just the hotel we use is right on the side of the M1. You can drive there, you can fly there, you can get there by plane from anywhere in the country, or indeed anywhere in the British Isles.
Okay. And what is the quote software called?
It's called Time's Up because it puts an end to time-based billing. You know, the time, and in fact, one of the things that I didn't say, but a few years ago, Sage carried out some major research when they looked at what business owners did and didn't like about accountants. Right at the top of the things that business owners hate about their accountant, the thing they hate the most is surprise bills. So an invoice that either the existence of which or the magnitude of which is not known about until after the event. Time-based billing automatically, inevitably, all of the time is a surprise bill because you don't know the magnitude of the invoice until after the event. So by definition it's a surprise, and by definition it is the number one thing that clients hate. So two massive reasons why the profession has to move from it. One, because it's the number one thing clients hate, and secondly, because most clients that use it don't earn enough money, so it doesn't work and clients don't like it. Why do we stick with that pricing model? Bonkers.
Another question here for you, Steve. Can you purchase the pricing tool separately?
Yes, £97 a month, yeah.
Okay.
So if someone wants to find out more about that, but you know, put yourself down for the masterclass. You're going to get it for free rather than paying for it for that period.
Yeah.
So, but yeah, it is commercially available at £97 a month.
Okay.
In fact, much more than I showed you. There's a whole suite of pricing tools. We only just looked at the tiny element of them. There's a whole suite of pricing stuff for £97 a month. Yeah.
Perfect. Okay, I'll just take a few questions here for Paul and Vicky. What does the declaration of compliance consist of?
Okay, basically that's just numbers of employees that are, say, eligible job holders that have been enrolled at the staging date, then the number of non-eligible job holders, number of postponements. There's more details on that up actually on the pension regulator's website, but basically it's numbers of employees that fall under each category at the staging date.
Okay. Will the software mean no CSV manual uploads and automate the data transfer to pension providers?
I presume that question's in relation to the API. Well, basically an API will work very similar to the way RTI works at the moment. So it'll be a one click within the software that will communicate the information to Nest at the moment is the one that's actually rolling out an API. There are others planned for the near future as well. So yeah, it does mean no CSV manual uploads.
Okay. What is the difference between worker and job holder?
Well, basically, a worker is everyone, whereas a job holder will be those earning over, I think it's £112 per week, and are between, I think it's 16 and state pension age. But everybody else is a worker, and it's only job holders that need to be enrolled or have the right to opt in.
Okay. What is the purpose of postponement, and should or can every employee do it?
I guess that there could be a number of reasons for postponement. A few I can think of there, possibly you have new employees that are in a probationary period. You're not sure whether they're going to be staying with you, so you may just choose to postpone them until you know more. Seasonal or temporary staff maybe, somebody who has a temporary spike in earnings, but wouldn't necessarily, for the year.
Yeah, that's exactly it. If you've covered all the points there, yeah.
Okay. Does BrightPay keep a record of all contributions?
Yeah, I think you showed in your presentation, Rachel, how you can prepare a report on basically the contributions paid and deductions made for any period or periods. So yeah, it does hold on to all that information in the background.
The historical contribution files can be viewed at any time as well.
Yes. Yeah.
Okay. When you're setting up a pension, can you set the deductions as a percentage and then override it after calculation if necessary?
Yes.
Mm-hmm. You can. I guess the question would be the purpose of overriding, though. Why?
Yeah. You shouldn't need to, but we were actually, believe it or not, we actually met with Andy Nichols of the pension regulators yesterday, and that was one of the recommendations he made, that we should actually have a facility for that you can do a manual override in case there are any circumstances that aren't automatically covered by our calculations.
Okay. How can we deal with test uploads on the pension provider's website if the files in the software don't populate until the date of assessment?
Well, you can't do test uploads on the, they don't have that facility. None of the pension providers, as far as I'm aware, have that facility. They don't offer like a test portal or anything like that.
Okay. Kind of going back to Steve here. How do we get the added bonus? An added bonus is that Steve is giving each attendee a gift copy of his groundbreaking research report, your blueprint for a better accountancy price.
We will be emailing it to everybody afterwards. So everybody that's actually attended will get an email with that as a downloadable link as a PDF file. So yeah, that's already set up to happen.
Perfect. Why has BrightPay not yet moved to cloud, and any plans for this in the near future?
Well, yes, we are working on that. Okay, it's complicated. The one thing we are hoping to introduce next year is basically employee self-service, so that would enable employees to access their pay slips and historical pay information and P60s and such like from a mobile device, and also get reports on pay for certain periods. That'll lead on to as well to basically backup within the cloud for accountants or users or employers, and eventually we will actually have. See, the data files that we use are compatible with, say, Apple. They're compatible with Apple, with Windows, and they're compatible with web development as well. So we actually have been thinking that way since the very start. It's just we actually haven't had the appetite from a lot of customers for the cloud. A lot of people are still kind of a little bit, I suppose, doubtful or reticent about moving their data, especially such sensitive data, to the cloud. So, they tend to prefer to keep it on their desktop, but at the same time, by using the likes of Dropbox or such like, they can still benefit from the advantages of cloud backup and using in multiple locations. But it's, I suppose, a pure cloud product for BrightPay won't be on the horizon for another couple of years at least, anyway.
Okay. I guess we'll leave it at that for today. We've kind of gone over our time for the moment. So I'd like to thank everyone for tuning in today, and we look forward to hearing from you. Okay, thank you.
Okay, thank you, Steve.
Thank you very much for having me. I really enjoyed it.
Okay, take care. Bye.
Bye, everybody.